Hello and welcome to Coffee and Conversation. I'm your host Karim Raffa and I'm joined today with Paul Everingham, the CEO of the Chamber of Minerals and Energy of Western Australia. On a global level, see that other commodity exporting countries like say Russia, Kazakhstan or even the US are steps that Western Australia is currently taking to optimize their workflow being mimicked there or resemble what their standard practices are?
Because we have quite a few companies here that operate in the US and in Kazakhstan in particular. I do know in the US there were unilateral shutdowns of mine sites and that essentially stopped production. And I do know that in Colorado and Utah, where there are global companies that operate in Western Australia, also in those two US states, they have looked to model the travel and mine site safety frameworks with which what Western Australia has been undertaking. We were a bit of a pilot case, for want of a better term, and other Australian states looked at Western Australia closely. They've largely mirrored Western Australia as well, and Canada, Alaska too, as well, had some mines shut. With Kazakhstan, it's mainly oil and gas. Well, Chevron operates both here and in Kazakhstan. They're their two biggest LNG operations. The learnings here are being implemented in Kazakhstan as well.
So Paul, you have mentioned that a lot of mines were closing abroad, particularly say in Kazakhstan, Alaska, Canada. Are investors still seeing mining as a long-term investment, or is there some doubt on the sector as a whole for the long term?
If you're a medium to large or very large mining company, access to equity and debt capital markets have been uninterrupted and perfectly fine the last 4 months. We have noticed in Australia a slowing of capital listings and equity raisings for the very small junior sector in Australia. I don't think that will last too long, and that's usually where, when the small junior sector is active, strong, exploring, developing, then the whole sector in Australia tends to be going really well, but I think it's more a function of uncertainty than any liquidity or access to capital.
If the demand for commodities doesn't go back to what it was before, what is, say, the contingency plan for commodity reliant economies, not necessarily just Western Australia, but worldwide?
Look, for a long time there's been discussions in Western Australia and Australia around ensuring we have alternative avenues for economic growth other than the mining and resource sector. I like to think Australia plays to its strengths, so that's not really, moving away from mining, but maybe looking at both parallel and linked types of sectors like engineering and technology and, say, mining technology or oil and gas drilling technology. And West Australian in particular in the last probably 3 years has really started to strongly develop a fantastic engineering, mechanical, technological, what we call the MET sector, mining engineering technology sector, where there's machinery technology. We have the largest automated fleet of trucks anywhere in the world outside of California in West Australia. That's in the iron ore sector. And Australia have gone through long periods over the last 100 years where commodities haven't been strong. Australia and West Australia, as a result, have had to focus on things like tourism and financial services, and probably outside of Singapore. Some would say even above Singapore. Sydney's now, the financial centre of Southeast Asia. Commodities is still 40% of, the Australian economy, but services like education, tourism, financial services are playing an ever-increasing role in our economy. Some of them are linked to mining, like financial services has got a strong link back to mining.
Absolutely. It's always very interesting, I feel, in economies that are very, I'm not going to say reliant, but have one major economy, be it finance in the UK, for example, is their major export. Commodities tends to be the one in Western Australia. How they can grow and laterally innovate across sectors. Like you said, self-driving trucks doesn't necessarily have anything to do with mining, but it does birth those job and exploration opportunities.
People would be surprised to know that there are massive joint ventures here. They think of mines as big holes in the ground, but Amazon's got a massive joint venture here with Rio Tinto. Apple's got a big joint venture with a couple of our larger resource companies. Google's got large mapping joint ventures here because all of the ancillary industry that helps make mining and this province the most technologically advanced and efficient and productive in the world requires that state-of-the-art knowledge and skills from Silicon Valley, and so those people in Silicon Valley want to go where the biggest players in the resource sector are. That's how it's sort of played out over the last 20 years, and we've got universities here with links to a lot of Silicon Valley knowledge and skills and enterprise, and it's quite an exciting time.
I guess, I mean, when you put it this way, it does seem like this plan's been developing over some time. Is this, do you think, a slow growth plan?
Since about 2012, when we had a bit of a price shock, the price of iron ore or Chinese demand suddenly slowed significantly. What it resulted in, not just in iron ore but in all sectors, it gave people a really sharp wake-up call. The sector almost overnight began focusing on, well, if it's going to be a low margin environment for the foreseeable future, low profit margin environments, low commodity prices means lower margin, then we've got to get innovative, we've got to get efficient, we've got to get productive.
So Paul, you did mention smaller mines earlier. Can you define those for me and tell me how much of the economy they really represent, how much of the industry they really represent?
That sector looked like it was about to really thrive late last year and early this year. The small mining company sector was looking extremely prosperous in the gold, iron ore and other commodity sectors. However, COVID came in sort of February, March, and a lot of those exploring and early stage mining companies have gone into care and maintenance through this COVID period, which is understandable. A lot of them have only a really small amount of staff and they can't implement or develop as any medium or medium-large or very large mining company can. But we're very hopeful that as we move out of the health crisis phase and into the economic recovery phase, we're really hopeful that the junior small mining company sector will start to thrive again, and I think you'll see a renaissance of mining in Western Australia at that junior level.
I guess you can compare it on a global level to, say, a smaller airline compared to a larger airline going through COVID, decreased operations.
Exactly.
Isn't sustainable with that staff level. Say when Australia and the world does enter that recovery, how big of an impact or how big of a percentage of that do you think will be reliant on the mining sector?
Yes, so it's pretty significant. So in Western Australia alone, we have about 130,000 direct mining and energy sector employees that work for our sector. But if you expand that out to jobs that have a link or rely on mining and energy, that becomes about 1.1 to 1.5 million jobs, which is about 50% of all jobs in this state are reliant on mining and oil and gas. And you would say 1 in 3, 1 in 4 jobs in Australia are directly reliant or related to mining and oil and gas, and banking, law, accounting, finance, engineering, architecture, archaeology, anthropology, a lot of them are all linked to our sector as a result. So our big services exports and services sector are often linked to our sector as well. Overall, I think outside of government, the federal government plus all of our provincial governments added up together in terms of as a size and component of the overall Australian economy, mining and oil and gas will be the second biggest contributor to the recovery in terms of dollars put in to stimulate the economy.
Paul, I'm afraid that's all the time we've had today. Thank you so much for coming on air and talking to us.
Thank you very much for having me. It's been a pleasure.
Thank you all for watching. This was Coffee and Conversation, and we'll see you soon.